What is going on? Welcome back to Financial Journey. So today I want to talk about SoFi. There's a lot of fear going on in the market, and you can even tell based on the live ticker at the very bottom of the screen, SoFi is selling off big time. So I'm going to be talking today, is SoFi in so much trouble that they can't recover from this? I'm going to be talking on a lot of the data points and things like that. But before I get into any of that though, making sure you guys hit that thumbs up, subscribe, greatly appreciate that. If you like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that, let's get right to it. So you can see live ticker down roughly about 9% today. Crazy day. 14.8 million as far as overall volume today, which isn't too bad considering we've only been open for roughly about 45 minutes. 52.8 is the average. 1.9 million shares being purchased by institutions and hedge funds just today alone. So there is some optimistic points going on here from the volume standpoint, but overall though, there is a ton of fear, largely brought on because of the CPI data. And in case you guys haven't taken a look at that in detail, it's not that bad, especially if you take out the energy component. We are actually negative on a month by month basis. So this is where there's a lot of fear out in the market because of this, which ultimately a lot of people are now thinking that the Feds have a lot of ammunition to raise the rates significantly, and that is coming this Wednesday. So most likely there's going to be a continuation of a downtrend up until this Fed meeting, which even looking at the forecast, it does look like they're only going to be raising at 50 points, but in reality it does look like the consensus out there is going to be 75 points, which is very damaging to a lot of growth stocks. And yes, there has been a lot of manipulation on SoFi, but as much as what people say, at the end of the day, it is their balance sheet. So just want to briefly show you this. So looking here, it does show clearly 1.35 billion in cash equivalent short-term investments, 525 million in long-term investments, and 5.12 billion in total debt. And I've been covering them for quite some time and looking at them in detail, especially their last quarterly earnings. They've done a fairly good job of increasing on a quarter by quarter basis. But at the end of the day, it is this. This is going to be very damaging to them, especially in a higher interest rate environment. And unfortunately, SoFi is in a little bit more of an interesting scenario because in general, their business should flourish in a higher interest rate environment. But unfortunately, they have a significant amount of debt, so they need to handle that before they can actually flourish. And in the end, it will actually come back down to the point, are they increasing customers? I think that they're going to revert back to kind of what Netflix started out as, how it was just merely looking at whether customers are going up or down, things like that. Because we all know in this sector, you can make a lot of money. You just need the customers. So that's something that us as investors need to really monitor closely. But I'm going to be talking a little bit more in detail about some other fears that's coming out and a little bit more relevant for SoFi. So you can see right here, there's nothing but recession talks right now. So hypothetically, a lot of people are saying is there going to be a recession in 2023, 2022, later 2022. It is all over the place, but the common theme is that recession is now going to be a very hot topic. But even more so looking right here. So you can see Goldman Sachs did project that the S&P 500 is going to drop to roughly about 3,100 in a median recession per se. And I just want to put that in perspective. As of right now, we are currently at 3,800. I'm just going to refresh this right now. 3,700 down roughly about 126 basis points. So overall, if we were hypothetically going to be dropping to 3,100, that is represented by a significant drop, to say the least. It's obviously dropped significantly. I'm just going to show you the 1 year chart. We were at roughly about 4,500, 4,700, give or take at its peak. That was in December. So the fact that we're at 3,700 and they're projecting possibly 3,100 shows that there's a little bit more downside risk potentially. So those are things that you need to be aware of, especially a lot of damage might come if the Feds continue to raise rates to a lot of these balance sheets. So companies that have significant amount of debt that they are going to be unable to finance, that is going to be very damaging to them. And not only that though, I'm just going to quickly pop over to Interactive Brokers to continue this. So right here, this is the point I want to talk about. So July the 12th is their shareholder meeting. I'm sure a lot of us already know that. It's been beaten to death as far as people talking about reverse split and everything like that. But I don't mean to do this, but I'm going to be talking about reverse split because hypothetically their intention in that is if we drop below $5, then there is a lot of institutions that are going to be dropping SoFi. So I'm just going to show you this because hypothetically I did do a very in-depth video on this, so make sure you guys take a look at that. But when it comes down to if we drop below $5, we are considered now a penny stock. So as much as that is backwards, it is what it is. That's what the basic stipulations around institutions, how they govern that. So I just want to show you this. The ownership has been going up significantly, which you can even tell based on this chart here. But looking right here, 310.41 million shares being held by institutions, 194.13 million shares being held by strategic entities. It is most likely the strategic entities that will have to and be forced to sell SoFi if it does close below that $5 mark for, I believe it is 5 consecutive days. That's something that you need to keep in mind, because look at the total value, 1.57 billion. Imagine that being sold on the open market. That is going to be a very, very big damaging deal. So keep in mind, yes, Anthony Noto is doing an amazing job buying as many shares as he can, which is very optimistic. I've never seen any other CEO do that. But unfortunately, it might not necessarily be enough. I don't think he has 1.57 billion lying around to kind of cover what possibly would sell. And unfortunately, like I already mentioned, it is stuck between a rock and a hard place. I do personally feel that a reverse split is going to be very much necessary if we do get below that $5 mark to save SoFi. But the negative thing is, unfortunately, we have to wait until July the 12th, 1 month from now, give or take. So are we going to survive until then? I don't know. Definitely we could break below that $5 mark even before this Fed meeting, especially if we do continue at the same rate that we are. So this is why I am saying, hypothetically, SoFi is in a lot of trouble. Definitely need to keep in mind for this. And unfortunately, I think a lot of investors are getting a little bit more tired of the constant downtrend, and most likely will be continuing to sell out. This is why at the end of the day, I always say SoFi is going to be a very innovative company, do a lot of good things, but it's going to be a very bumpy ride, and you need to be comfortable with that, because they are trying to disrupt one of the oldest sectors known to the whole market, the banking sector. So in the end, yes, they might break below that $5 mark, which could cause a lot more further damage, but overall, it depends on your time horizon, right? Long term, this is just short term noise. But in the short term, there's going to be a lot of blood in the market, and it does show most likely the Feds are going to continue to raise the rates at a faster, more aggressive rate than what was even previously assumed. So, like I said, it is what it is. I'm not a financial advisor, so do your own due diligence at the end of the day. But like I said, given all the circumstances, I think that the risk versus reward is definitely there with SoFi. You just need to be comfortable with a lot more volatility. But again, just want to point this out because this is a very good point, is that the volume is up. So regardless of us going down as much as we are, clearly a lot of big institutions are buying because the number of trades is down. So only 46,000 trades being done as of right now. So shows and insinuates that big money is buying. So take that how you see that. That usually is a fairly good sign, especially for a lot of institutions based on the 13F. A lot of them have, as far as within the teens, an actual average. So they might be taking advantage of these massive cheap prices, discounted prices to lower their average, as should you. Make sure you always dollar cost average. That's the best thing to do for the long term. But with all that, let me know your thoughts on SoFi in the comments below. If you haven't already, hit that thumbs up, subscribe, do all that fun stuff. Greatly appreciate that. If you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that said, appreciate you guys watching, and let's all make a lot of money on SoFi.